Well, hello, everybody, and welcome back to the summit stage. We're going to get down to the nitty-gritty, the question of money. How is investment going to work after the coronavirus crisis? What is the real responsibility of VCs in times of crises? And will VCs evaluate deals differently? I'm going to hand you over to Richard Muirhead, who is the managing partner of Fabric Ventures, and he's going to show you around our top panel for this event.
Thank you, Joy. Good afternoon, everybody. Yep, indeed, I'm managing partner at Fabric Ventures, who have been collaborating closely with the team here at CogX, and in particular on the Web3 stage. But now we're going to talk about the real responsibility of venture capitalists in this time of crisis. And I'm going to start by introducing our panel before we get to the questions. First of all, we have Priya, who is venture partner with Merian Ventures and actually a council member at Innovate UK, and has come into this from the Foreign Office. Priya, welcome.
Thank you, delighted to be here.
And then next we have Matthias Lumen, who's founder of Moonfire Ventures, formerly of Atomico, perhaps more famously, with a varied background in many great companies like Seedcamp and Truecaller and Supercell, and prior to that, consultant and analyst. Matthias, hi there.
Hello, it's great to be here.
We also have Minoo Zarbafi, Senior Vice President at Bertelsmann Investments, and indeed Head of Digital Partnerships there. Quite a wide-ranging consulting and operating background. Minoo, welcome.
Hi, good afternoon. Nice to be here.
And also Noor, Sweid, who's a general partner at Global Ventures, and has a background in both in operating both within yoga and also within construction. I think it's a nice contrast. Welcome, Noor.
Thank you. Thanks for inviting me.
Right, so I thought we'd kick off to trying to make sure that we understood effectively what the definitions in the question is. I think, well, let's start with venture capital. I think you could say that venture capital is about allocating capital to optimize return to your investors, but it also is this strange construct that is long-term, but preserves the right for the venture capitalist, the general partner, to abandon that mission at the point that they see fit. So it's an interesting balance of things. I wonder if anybody wants to expand on what the core responsibility and activity of venture capital should be, perhaps in all times, let alone in crisis. Who would like to kick off?
I'm happy to take a stab at it. Richard, you know, in terms of thinking about what it should be, to me, it's maybe interesting in terms of what we do and what type of outcome we try to achieve. So to me, venture capital since time immemorial, which, by the way, venture capital has been around for hundreds of years. If you think about the first limited company that was created here in Europe, the idea was to put money to work into something that creates something new, that innovates, that challenges the norm, and creates something that's endurable, but also sustainable. So to me, it's all about change, and that's kind of what we stand for. So in these moments in time where we're seeing a big crisis, it's maybe the one time that we step up and build the next generation of companies that work in this new environment, this new world that we're in. So I think, you know, in terms of our responsibility is to carry on that. And I think, you know, when we founded Moonfire, that's what it's all about. It's about challenging the norm and building the next generation of billion-dollar companies.
Great, thanks. Noor, how do you think about, I mean, this question of like, why does venture capital exist in the first place? I agree with Mattias that, you know, limited companies, joint stock companies have been around for hundreds of years, arguably, but venture in its current form really is only the last sort of few decades. I would possibly posit. Noor, what are your thoughts?
So I think that venture capital is a very interesting form of journey. As an entrepreneur, you need different sorts of people to take you from one part of your journey to the next. So some VCs really focus on the very early stage, some focus on after you've made some revenues, others focus on when you're a much larger company. So I don't think, to your earlier point, that someone can expect that the same venture capitalist is alongside you the entire journey. That's the point of the founders, to have the entire journey. The venture capitalist just helps carry you from one part to the other. A long time ago, people invested in companies once they were profitable, once they had balance sheets that were sustainable, and P&Ls. Venture capital is the other side of that equation. You're investing in the founder, you're investing in the belief, you're investing in the vision and the future, rather than in what currently exists. You're investing in the person, not the company, is how I see it.
Got it. Yeah, makes sense. Priya, any thoughts on venture capital? Why do we exist?
Well, I mean, I think, we exist to provide the sorts of capital to the sorts of companies that Matthias and Noor have just described. I mean, I think the interesting piece comes to the central theme of responsibility, and who is the responsibility to? Matthias talked about the responsibility to founders, particularly in times of crisis. Absolutely. We've clearly also got a responsibility to LPs, the people that are investing in the venture capital fund in order to make profit. We've also, frankly, and this is coming to the head in times of coronavirus, but is relevant in times of financial crisis, or indeed in any sort of existential crisis that the world faces, we have a responsibility to society. So I think it's really interesting to think about it across the swathe of where that responsibility lies. Got it.
And Minoo, how about you? Challenging people to principally come up with this definition of justifying our existence as venture capitalists. What's your take on that?
Yeah, I think I'm going to pick on what Priya just mentioned, and maybe quickly talk from the perspective of an LP, given that Bertelsmann Investments is an LP not only in external VC funds, but also obviously for our internal investment teams. I think the responsibility that we have is a long-term responsibility, and is to provide funding, and talking from an LP perspective or corporate perspective, without being constrained by fund durations, for example. So I think if you're in a crisis and people start to have a more reserved attitude towards venture capital, and I think there was a recent article from CB Insights estimating a drop of almost 20% in global CVC-backed funding. We really have to ask ourselves if this is the right moment if this is really the right moment to think short term, or if this is actually the moment where we have to be responsible and provide the funding to make sure that innovation, especially, I mean, speaking now about Europe, but especially here in Europe, will maintain the momentum and not fall.
So that's it. Thank you for that, because that's a great segue to I think this point about VCs reserving the right to abandon the support of the founders at some point. So if we just take the very specific question of, maybe we'll come back to defining what crisis we're currently facing, but if there is a crisis, there's less funding around, or decision making is slowing, and there's been a big push by government to support different founders with top up funding. Do you think about this from the perspective of what has been called time travel? So is it like there's a cohort of founders, and it's our responsibility to work with government to get them 6, 9, 8 to 12 months into the future, and then after that the natural sort of course of attrition and abandonment will take place? Or is this a good time to sort the sheep from the goats, do a strict Florence Nightingale triage, and so be it? How do you folks think about it? Anybody can open to the floor.
Well, I'm happy to kick that one off, Richard, not least because I've seen some of this up close with my role on the Council of Innovate UK, which has been one of the main places for startup support funding in the UK. And we've seen similar methodologies being employed elsewhere across Europe and in the States. I think the reality is that we are in a particular moment in time where we will need desperately the sorts of innovation that the startup sector provides, the technology sector provides. We will need it because to come out of the COVID economic hit, those are the sorts of companies that will drive our innovation future across the board. So I think it's absolutely essential that governments have taken the decision to step in, to take the decision, as you rightly say, not to necessarily choose winners or losers, but to say for those companies that are credible, that meet basic criteria, we want to help you. We want to help you survive the current storm, come out the other end, and be part of the post-COVID economic recovery. Now, clearly, not all of those companies are going to survive long term. But what we want to do is at the point of we come out of the immediate economic crisis, have a whole range of amazing technology businesses at different stages of their growth journey that can help contribute to that domestic and global economic recovery.
I mean, certainly, I'll pass it back to the floor just in 2 seconds. I think both John Kerry yesterday and Tony Blair earlier today talked about, kind of the wake-up call, or the accelerant, impact of the crisis on our opportunity to seize different new innovations and leap forward rather than kind of fall back on where we were before. But in answer to critics who might say, well, do I really want to deploy government money, taxpayers' money, to fund unproven bunches of people who are buying lots of coffee and pontificating on the future? Why wouldn't we take this opportunity to try and make some choices?
Well, I don't know, Richard, really what you're implying on that. I mean, to me, the market is what the market is. Either a company works or it doesn't work. And of course, government funding and so on is extremely helpful. And we are in unprecedented times, and it's kind of a big clash that's kind of happening now. But if I move to sort of another point about Moonfire and what we stand for, one of the key tenets I have is about going after what I call founder loyalty, which I think is very different from founder friendly. So to me, founder friendly is something that I interpret as something where you're basically about giving founders what they want and then being pretty sort of laid back about the whole thing. Whereas for me, being founder loyal is being alongside them when things get tough, being in the trenches, helping them out, standing side by side. And this is a really tough time for them. This is a very tough time to sort of develop your business. You're very much alone. It's extremely stressful, lots of anxiety. But it doesn't mean that you're giving them handouts. It doesn't mean that you are just going to say, yeah, whatever the circumstances, I'll let you continue. But it allows people to get over some of these most difficult periods and help, build many times what are businesses that will, explode and become really successful potentially in this new market. So I think that's really what our job is.
So I would agree. I also think that it's important to keep in mind that the smaller companies clearly suffer a lot more than larger companies. So supporting them through this time is also time for reflection, in that the last crisis, most of them were probably not running companies as founders. And it's the first time that they're through this journey in a position of leadership where they're trying to adjust for their culture, for their finances, and trying to pivot, as we call it, which just means, change. And I think that all the support that you can give is necessary. And, given the privilege that we have to be able to work with such incredible founders in our part of the world that are solving real world problems, now it's needed more than ever.
Well, maybe to finish here, I think obviously there is no prioritization, in my view at least, for example, VC-backed startups. I think if you look into the economy, of course, you would have to think about who to support, and I think there's probably lots of SMEs out there, which may not fall under the category of a tech company that need support. So I think in general, it's probably less a question of should VC or should startups get support. It's more like, should we support the economy in general, and then obviously find the right balance to allocate the capital. I think the only thing we need to avoid, and here I 100% agree with everyone. Obviously, if you have a large company right now, there's lots of jobs at risk, and sometimes people have a tendency to prioritize those existing companies over maybe the new startup that I think you said, where people are drinking coffee all the time. But at the end of the day, I think from at least from what I can see, being exactly at this intersection of witnessing how a corporate is dealing with the situation and how a young company, a startup, is dealing with the situation. You obviously have the advantage that small companies are much more agile and much more quick in adapting to the current situation, which I don't even know if it's a crisis. It's a change in situation. And for some people, it's actually not even a crisis. It's an opportunity for more creativity. So I think that's just something to obviously keep in mind when looking into the question of support, yes or no.
So thanks, Minoo. Indeed, so people are spotting this opportunity. There's some urgency around it. And hopefully those are opportunities that can create, positive impact. There could be perceived to be some tension between the fiduciary duty of venture capitalists to deliver returns, multiples mostly, to their limited partners, their investors, and this opportunity to do something impactful and positive. How do you folks think about that tension, if indeed you believe that there is one?
Well, I definitely don't think there is a tension, because I think the whole purpose of venture capital is to do something different. It's to build a new type of business. It's challenging the norm. It's creating new systems. This is not just incremental changes we're looking at when we're looking at changing whole industries and whole sectors that have a global sort of footprint. You're not in the business of sort of doing smaller changes. And so therefore you're moving into the world of impact, because that is what the big businesses have had. The biggest companies in the world are venture-backed companies today, whether it's Facebook, Google, or whatever. And they've had enormous impact on our world and our economy and our communities and our society. And they will continue until the next generation. And that's what we're investing in. We're investing in the next generation that will take that mantle. And it's really important for us, therefore, to sort of think about the principles. What is it that we're building? Why are we building this? And how do we set up a business that's going to endure and build something that's sustainable? And if we don't do that, well, they probably won't succeed. So I think in that you need diversity, you need different types of thought, and then you need to build principles that allows you to build long and lasting businesses that work in this new world order.
So Mattias, let's hold that thought on diversity, which of course is a broad question, and maybe we can think about ask the other panelists to talk about this question of the tension between impact and returns.
I mean, I think if I can come in, Richard, I think, there is a bit of a fundamental misnomer that somehow having a positive impact, so let's say positive impact environmentally, having a positive impact on, diversity and inclusion, which you rightly said we'll come back to later, having a positive impact on ethics in society is somehow conflictive with a profitable business. I think what we're seeing across the board is that actually the best businesses globally are the ones that will think about their sustainability, think about their impact on society, think about how they build in ethics to the algorithms that they're developing as they scale. So actually, we need to recognize across the board that those are profitable businesses, and so it is not a sort of fundamental clash between the two constructs.
So Priya, connecting the two thoughts and just challenging you both, I think to a broader audience, folks might say, look, if you're solving for profitability and for growth, how can you possibly be also serving the needs of impact and positive impact for that matter? And indeed, Ronnie Cohen earlier today was actually commenting on exactly that and saying, we started looking at profit effectively after 1929, and now we need to think about a different kind of accounting that includes maybe it's a 5 bottom line accounting system that includes other factors to cope with our responsibility to the planet, for example. So just to either of you or the others or both or whatever, just how can we be certain that that's actually what we're doing? Now, and I'm not saying that we need to be responsible as venture capitalists for everything that some gargantuan company does over the next 10, 20 or 30 years, because clearly things change. But comments?
Well, I think the thing, we're dealing with businesses, at least my businesses, a lot of them are not making profits. So that's not really a problem that I'm dealing with at the moment. It's about building great businesses, and allowing them to expand and to grow. And that is the obsession, to be honest. The obsession is, how do you create the environment that you become super successful, that you are challenging, or what are the established businesses, which are maybe more in that harvest mode, that are actually focused on profit, that have a difficult time in terms of doing the transition and moving into our world, which is probably the world that we live in right now, which is this world of crisis, which is more chaotic. There's more complexity. And I think that's the challenge maybe they're working on. But every one of our companies, that's their daily bread, So I don't think like the obsession with profit is something that in terms of, and also that being something that goes against their ambitions in terms of creating broader impact is really a problem today in the younger businesses.
Good.
And I don't think that doing well and doing good are mutually exclusive. I think when we take a look at founders, most founders we work with are very purpose driven. And then it comes down to, what is the purpose? What are they driving towards? And a great example now is what we're seeing in healthcare, and healthcare inclusion being a focus across emerging markets. So billions of people have no access to a primary care physician. There's no such thing as Teladoc or Babylon in a lot of these markets. So the question is, how do you give a lot of people access to healthcare? Just like 10 years ago, it was, how do you do financial inclusion for 85% unbanked without building more banks? So we wanted people in the financial ecosystem. Now we want people to have access to healthcare. That's going to take founders that are purpose-driven, that work day in and day out to create something that ultimately the objective is to do good, and they will do well by default. Because by doing that much good for that many people, it's a massive opportunity to do well.
So can I pitch in on that point as well? Because I think that concept of access, which has been kind of fundamental to, this whole generation of tech companies that have been created. It has all been about that, and it's about breaking down those barriers. That's how you've created very, very big businesses in the sector, because they've allowed broader access. And just like we've just talked about, it's now going to be spread across more sectors, and it's going to be more global. So like, we just heard healthcare, absolutely. We're going to see also, different forms of we've already seen entertainment, we've seen it in capital, we've seen it in education, and that's happening, by the way, at a rapid rate that I'm feeling myself. So as a father of two children. So, these changes have just been, with the digitization, with the crisis, they're just being accelerated.
So building on those thoughts, so we seem to be, there's some kind of consensus, but others may want to comment. Can we come up with some examples of what are we seeing opportunities to seize this crisis and be investing in? We've got healthcare in the general sense, but anything, some other things that are more specific and that combine that great opportunity for returns with impact.
Maybe just one thing, Richard, to add to the discussion before. I think the question. And first of all, I hope, Matthias, at some point your companies will see some profit, hopefully for you.
They do, many do. Don't worry. Good luck. It's not our obsession, though. We're not obsessed with it.
Good. No, so I think the question is maybe not if these things are go hand in hand, yes or no. Can you do good and at the same time have a financial return, yes or no? I spent roughly 4 years of my time in researching responsible investment back in the days. So at some point, I stopped this thought about the yes and no, because you can look into studies and you will find out that 50% will say yes, you can combine, they go hand in hand, and then 50% say no, we couldn't see any link. So I think the question is more, how can we ensure this? Because if you do this yes or no, it will be endless. So let's rather think about how, if we want to have sustainable results and if we want to have impact, what can we do as a VC to foster this? Because we're in a very, very privileged position I mean, my research at the time was actually on equity. So it's much harder if you're like just one, one investor without having any impact to come up with this claim of being a responsible investor. But as a VC, I think being so close to the founder, you can actually do much more. So I think that's probably the question of maybe coming back to your examples as well that you were asking for. What can we do as a VC without having the majority, but still having an impact to make sure the company is going in the right direction?
Well said, Minoo. I think that's great. And Priya, I think you're still to chime in on this if you want, but to get people thinking, I think let's build on this point of responsibility and so steer back to other forms of responsibility around, not just the purpose or the mission of the portfolio company itself, but perhaps, who it is that we are funding to do these things and who they serve and so forth, or who we work with. Priya, do you want to?
No, I mean, I was actually just going to pick up on your request for sort of examples of people who are right in this, sweet spot of having something that is both, responsible, but also leveraging a particular situation related to the pandemic. So I advise a company called Cairo Medical. It's a UK startup. They are very small, but focused on one particular really important aspect, which is how to use artificial intelligence to help with cancer detection. And their first product, Mia, is about breast cancer. Now, I don't know whether the audience are aware, but actually during the current pandemic, all cancer screening in the UK and elsewhere across the world has been put on hold. So you have this, really, really important moment where, as you rightly said earlier, Richard, there isn't a need for technologies to be brought in, and the cancer screening services in the UK and elsewhere are desperate for this sort of technology because they now have a really big backlog of women who haven't been called for screening, some of whom, very unfortunately, will have early signs of cancer. So that's a great example of a company that's sitting right in this niche of, we have something that's a huge value add that will, have a really positive long-term impact on society. And there's also a real pull from the health services, from the governments, to be accelerating that technology to come in. So there's a very interesting sort of alignment between different things that's happening at the moment that I think could be transformational for society across the board.
I think that's a good point. I think the awareness of the ability to have positive impact and make returns is much higher than it's been before. And the transparency both to government, to LPs, but also to the society in general is much greater. And I think that transparency obviously ensures people are held to that higher standard, as well as everybody wanting to be held to that higher standard. So I think that's great. So before we steer back again to this question of kind of inclusivity and diversity and so forth, and how that factors in our responsibility, I just want to encourage the audience to ask questions. There are a few coming in already for the kind of final section of this panel. So anything and everything you want to ask, although Camilla, the Slido operator, will be moderating. So, but hopefully in a responsible way. But back to this question of diversity and inclusivity. Who would like to kick us off on that topic if we're done on the previous one?
I mean, I'd be happy to kick this off. I mean, I think this is one of the fundamental issues of our age. We're seeing this at the moment in terms of the global debate on race and exclusion of underrepresented groups in the context of race. But it's also well known in the context of gender representation, in the context of social inclusion, etc. And I think, actually, VC is one of the biggest culprits. That's partly what drove me to be part of a firm that actually focuses specifically on investing in women, just because, as probably everybody knows, but in the UK, only 1 pence in every pound goes to women. Now that is a good thing to do, but it's also really important because businesses are better when they're diverse. And I think this is the bit that, we just have to incessantly keep talking about. If people haven't followed it, McKinsey do research into the impact of diversity and inclusion on business. They've now done that for 3 different reports. They are incredibly powerful reports because they talk about that if you have a gender diverse senior team, you get 25% better returns in that business. If you have an ethnically diverse leadership team, you get 36% better returns for that business. So if we are being a responsible venture capital community, we should actually be strongly advocating for diversity across the board, because the businesses will be better. They will develop better ideas. Those ideas will impact society better across the board. It's a no-brainer.
Other folks would like to chime in?
I don't think there's anything more we need to say. I think she nailed it.
I just want to add that I'm so glad that it's a majority of women on this panel. I've never been on a panel about venture capital where it's a majority of women. So I'm so pleased that we're getting some progress here.
Hats off to CogX and in particular Tabitha and also Anastasia on our team. I think the percentage is pretty close to it's very high double digits, maybe even 45 or something like that across the board, which is great.
Now let's see if we're 20% better than the rest. But
VC's getting into metrics already.
But I want to add to Priya's comment, if I might. So I think that, just as in large corporate consumer products, the number of women who worked at those organizations and served on those boards changed drastically once it was made clear that women make those purchasing decisions. I think that in technology, we'll start to see the same thing happen. So before, when tech was mainly a guy thing, for lack of a better way to say that, and started more in the gaming and the coding, and mainly it was men that did that, we saw a lot of men. I think that now that we're seeing more innovation in areas like healthcare and education, where there is a large number of women in those industries, we'll probably start seeing more female founders come forward, more innovative solutions, since women are the main consumers and selectors of those products in organizations. So at least I'm hoping. No data yet, but in 5 years we can look back and see, look, there's more women founders now.
I'm optimistic.
Just to break also the belief that it's only men who play games. There's a lot of women, both young and old, who play a lot of games. And for me in Moonfire, I've actually made 2 investments in, as it's still a young firm. I started up Moonfire just this year. What's interesting there is like, the 2 gaming investments that I've invested in, they're both targeting other groups, right? So I'm focusing on women particularly, who I believe will become big consumers in different forms of gaming, which are going to look very, very different and are going to be very different forms of content. And I just think that's really exciting.
Great.
Very good. So I think keep vigilant, though. That's the only other thing I'd add to this in terms of this question of diversity and inclusion. I think it's not a quick fix. And there's still some real systemic challenges. I've just been doing some hiring and finding incredibly hard even at the fat end of the funnel to get the diversity that you want, even at that stage. So just going to some of the questions, I think maybe I'll kind of bundle maybe 1 or 2 of them together. One of the questions concerned, could we go too far effectively with combining to the desire to deliver returns with seizing upon the current crisis, i.e. slipping into the territory of profiteering from a crisis of some description, not war in this case, but a war, I guess, of some description. And so could that go too far? That was one question. And then related to that, in terms of the opportunities coming out of the crisis, that Steen Jacobsen, I did not see him speak, but apparently he was talking about clean tech and indeed green ventures to be, a focus of future, unicorns. What is the panel's view on those 2 questions? And then we've got some more coming in, so let's go with that for starters. Who would like to kick off?
I'm happy to take the first one very quickly. I think when the question, if you think about it, is probably a question that is rather focused on a short-term view. So in a short term, you may benefit from something that is currently a crisis. But if you look into any investment theme of a VC, then usually you would look into something which is building a platform and scalable and basically building a business long term. So that's why I would say from the top of my head that something that is very short-term oriented and more exploiting something would probably not make it into the investment committee at all. But that would be just my guess. I'm not sure what the others would say.
I mean, 100% agree. You know, I think what is really happening is that firms are noticing that there's an opportunity in terms of them building market share and being able to distribute their products and services. So I would see that they would try to find ways to make that more simple and easy rather than trying to make money, because the type of businesses that you're looking at, like you said, they're looking for the long-term game. They're not looking for a short-term cash flow thing, and investors are just not interested in something that might work for 6 months. They want to build things that work for 10 years.
Other comments? No, Priya? Nothing on the profiteering side. So maybe flipping around, there are a few questions coming around this point about, what are the opportunities? Is it gaming? Is it green tech? Are there other sectors that are particularly exciting you? I think, unsurprisingly, folks are crying out for concrete examples, because that always brings it home. Maybe they're crying out for investment advice as well. So these are private companies, so we can probably share our thoughts. So that would be, again, come back to that question if we have some ideas that we're willing to share. And then the other one that's recurring here is drilling deeper into the questions around, although, and I can report that it is pretty much 50-50 for the summit stage, women to men. The reality, of course, is there are far fewer both, female venture capitalists and indeed female portfolio founders. And so, drilling into maybe from personal experience or in general, what are the roadblocks that you have found to that? So 2 questions, free investment advice and clear articulation of roadblocks to women in venture.
I'm happy to jump in. So I'll do the first one first and the second one second. So I think on the investment advice, and I'm not sure if you're looking at this from an investor perspective or a founder perspective, what I would love to see at this time of crisis is more platforms being built. I feel like with every crisis, platforms get built. Last time it was, Uber, Airbnb. So those are platforms. And now I would love to see some education platforms be built. So content's always been a bottleneck for education. Content is now a commodity. What's the platform that's going to sit on top of that to enable us to manage that effectively as consumers, as educators? Other platforms that could be interesting right now, for example, in agriculture, everyone's looking to build vertical farms across markets as supply chains became disrupted and this becomes a national security issue. Great, what's the software that these farms are running off of? Where's the data aggregation? So for me, the platforms are interesting. Platforms around future of work. So everyone talks about the gig economy. Great. If I'm someone who wants to participate in that, where's a platform where I can manage my time, where I can find different opportunities, where I can aggregate and consolidate? So for me, it's really what platforms are being built that can address the post-COVID economy pickup and uptake in those markets. That's the first question. The second question on why don't we see more female investors and founders? I wonder the same thing. I'm a female founder of ABC. And I saw there was an earlier question on, first-time fund managers being female. I think that first-time funds are hard to raise no matter what. I think as a female founder or VC manager, you believe, and I don't know if this is accurate in that or inaccurate, that there's a smaller pool of capital available to you, and that's just not an encouraging thought. So I don't know. I'm happy to help any female founders or fund managers who want to chat, but it's not an easy journey for anyone.
That's fair. Good points, Noor. Thank you. Who wants to go next?
Happy to help as well.
Yeah.
Well,
I think. Sorry, go on.
Sorry. So go ahead.
Just really quickly. I mean, I guess the point about what are the new sectors that are up and coming. Obviously, I agree with everything Noor said. I think some of the best companies though are solving a problem we don't know we have, and I think part of the really interesting discussion that is happening now and will continue to happen over the next few months is what are the problems that we didn't realize we had as a society. I mean, I don't think anyone would have really considered sort of indoor geolocation in order to maintain 2 meters distance between you and the next person as one of the key fundamental challenges for society. But it's become that because of COVID. So the problems that we don't know we have, I think, going to be some of the most interesting ones. To just like pick up on the second question, I think, this is a time of real opportunity. We've talked already about why having an inclusive environment is important for business, and that is because of the returns you get, aside from anything about it being the right thing to do. And I think the more and more people understand that, the more change we're going to get, because this isn't just about ticking a box that says you're doing something good or being able to, talk some blurb in a PR article. This is actually about making the right decisions that will benefit your business, whether you're a venture capitalist, whether you're running the business yourself, and actually therefore having a bigger impact across the board. And so we all need to be part of this. It's not about women stepping up and doing it. It's about women, men, underrepresented groups, everyone being part of the conversation and being part of the solution. And I'm really confident we can get there.
Yeah, I just want to add to the second point. I actually invested myself in a female first-time VC fund manager. And maybe it's also a question because we're still kind of like on the way. So I think the more women we have on top of decision making, the more women we eventually will see. So it's maybe just a question of time, and maybe we just need to be also a bit patient to get this system evolved. But I agree with you, Noor. We have to do it, and I'm also happy to support, and I did it already. But probably we need to do more than what we're doing already.
So one point I'll chime in on, or kind of echo, or maybe advice to part of the audience listening, is that my belief, at least, is that venture capitalists have very few accurate insights into the future. And so by all means, listen to what everybody here is saying, and there have been some really good thoughts about what we think we know and what we know we don't know. However, the insights really come from you, the founders out there, and the best that we generally can do is to kind of be slightly better than unprepared for spotting what those insights are. And then there's other work that we also have to do, but I just want to make that clear for those who are trying to get their head around how to think about ideating for the next big idea. So as we kind of move into the last few minutes here, there were a couple of questions around remote working and what's going to happen to us in the venture capital industry, to startups indeed, and co-working spaces. And indeed, this question of can one go backwards from being an online conference to being a physical conference, or is one now tethered to being online? And then other commonly recurring sort of problems amongst founders. So any final thoughts on that would be great. But I also promised you folks a kind of chance to, if you read some of the notes, to do a kind of rapid fire, one thing you'd fix in venture, if you can come up with something. So any of those in a kind of rapid fire manner, moving through the panel. Who would like to go first?
I mean, I can go first on the rapid fire question, Richard. For me, it's valuations. I just think we need to get some sense and consistency in valuations. I'm sure, there's the recent example of Clubhouse. I'm sure it's an amazing, amazing business, but to get a $100 million valuation at the stage it's at, it just seems to be completely bulking. So some consistency across the board, and a better sense around valuations would, I think, help us a lot.
Thanks, Priya. Minoo?
I would say sometimes I believe this community is still a very much closed community. So I think I would probably say we could eventually derive better results and even more realistic valuations, as you just pointed it out, Priya, if we had a bit more open systems and a bit more transparency.
Mm-hmm. Noor, Mattias?
So we have the opposite problem. Our valuations aren't so much of a problem. We'd like to see more capital in venture capital. I'm based in Dubai, and the Middle East and Africa doesn't have enough VC funding for a lot of incredible founders that we sometimes have to pass on just because fund sizes are limited.
It's funny because I had the same point. I mean, Clubhouse is in the US. It's not here. I think we're talking about access. We're talking about being able to have a broader group of people involved in the community. I think more capital is needed. I need more capital that's spread across broader groups. And so access is probably the one thing that we need to keep fighting for.
Mm-hmm.
Yeah, so good set of points. I would concur that I think that Europe and Dubai, UAE, both require more venture capital. I think it's just statistically a fact compared to China and the US, and that hopefully this conversation has helped a little bit with breaking down the kind of barriers. I mean, venture capital has come a long way since I was a kind of a green founder in the quote unquote sense back in the mid 90s, and obviously there's a lot of blogging, and I've really encouraged founders to go and read up on the great blogs out there from venture firms, and there's a lot more collaboration and openness about it, and hopefully that will encourage more people from every walk of life to get involved with starting something, or indeed coming in and being part of a firm. There's a lot of great firms setting up venture scout programs, internships, and so forth. So hopefully that will continue to accelerate, and that will create opportunity for people. I'm hearing, I'm understanding that I should be closing, and I think that we're meant to be doing that right now. And so I will do that by saying thank you very much indeed to Priya, to Mattias, to Minoo, and to Noor, and thank you for joining us. And I thank you to everybody who listened in, and you can probably find people and continue the conversation if you want to do that. Thanks very much.
Thank you.
Thank you.
Thank you.
Want access to more CogX videos? Subscribe now for free at cogx.co.